Optimism is hitting rock bottom, and most people have no idea what's actually happening behind the scenes. While the price collapsed to 45 cents, the entire Superchain ecosystem just hit $6.9 billion in total value locked. That's not a coincidence. I'm already accumulating at these levels with a very specific risk management plan, and in this video, I'm showing you the exact chart patterns, the technical levels, and the fundamentals that make me believe this isn't the end of the story. Let's break it down. Right now, Optimism is trading around 45 cents. For anyone holding this token, that's frustrating, I get it. If you bought anywhere higher, you're watching red numbers. But here's what separates successful long-term investors from emotional traders. They look beneath the surface when everyone else is panicking. The bloodbath in this market is real. Some exchange data showed OP touching 23 cents recently. That's brutal for your portfolio. I know because I'm dealing with losses myself. I started accumulating on the dip when price was around 65 cents, thinking it would bounce. Instead, it kept falling. But that's actually turned into an advantage for me now. Every time I add at lower levels, my average cost goes down. That's the dollar cost averaging strategy in action, and it's exactly what I'm doing right now. The question everyone's asking me is simple. Why are you still interested in this token? The answer is in the fundamentals of what Optimism is actually building. Let me explain something that most people are completely missing while they're watching the price chart. Optimism launched something called the Superchain, and it's becoming the dominant force in the entire Layer 2 ecosystem. Here's the concrete data. The Superchain secures 42% of all Layer 2 total value locked. That's $6.9 billion secured by networks built on the Optimism stack. Compare that to Arbitrum with $4.5 billion, Polygon with $1.8 billion, and zk-Sync with just $100 million. Optimism mainnet alone holds the majority of this, but networks like Base, Onchain, Ethereum, and Onchain are all built on this same technology, making the entire ecosystem stronger together. The beauty of this architecture is what Optimism calls shared tech equals shared growth. Every new blockchain that launches on the Superchain makes the rest of the ecosystem more powerful. It's a network effect in real time. Fundamentals aren't just about price and money locked. They're about activity, adoption, and real builders creating real applications. In September alone, 184 developers earned retro funding rewards. That's recognition from the ecosystem for measurable impact. These weren't random people applying for grants. The system works backwards from actual delivery. Builders create applications, and only after they demonstrate real value do they receive compensation. The numbers show 109 on-chain applications and 79 DevTools projects being actively developed across the Optimism ecosystem. That's not declining development. That's sustained engineering effort on products people are actually using. Think about what retro funding represents. It rewards public goods that strengthen the collective development tools and infrastructure, and on-chain projects that drive adoption. This model creates incentives for long-term builders, not just hype chasers. When you see these numbers, you're seeing a real ecosystem, not a speculative bubble. Optimism made a huge admission recently. They posted that despite making massive progress bringing the world on-chain, they were still missing a basic requirement: privacy. The Ethereum Foundation had previously committed to making privacy a priority, and now Optimism is following suit. Here's what this means in practical terms. Right now, on-chain transactions are transparent. Everyone can see everything. That's great for security and verification, but it's terrible for user adoption. Most people don't want their every transaction visible on a public ledger. Privacy features unlock everyday use cases that currently aren't possible. Optimism is positioning the OP stack as the perfect home for privacy-relevant applications. They specifically mentioned how the stack is proven in producing high-throughput chains that can handle privacy applications without pricing out users with high transaction fees. The Pectra upgrade arrived on the Optimism stack before any other Layer 2 ecosystem. This is the kind of technical edge that creates moats around the ecosystem. The bigger picture here is that as new privacy primitives launch on the Optimism stack, it makes the entire network more useful, faster, and frankly, more attractive to developers and users who've been waiting for privacy solutions at scale. Let me show you something concrete about real usage. Velodrome, one of the largest decentralized exchanges running on Optimism mainnet, just surpassed $10 billion in volume year to date. That's not a small number. In fact, they're now locking in 250+% year-over-year growth. $10 billion per month in transaction volume is the kind of number that shows Optimism isn't just a theoretical project. Real money is moving through these networks every single day. And it's not just one application. Optimism mainnet keeps scaling with real usage across the ecosystem. That $10 billion milestone from Velodrome alone tells you something important. The infrastructure works, the economics work, and users trust it enough to move significant capital through it. Oh, and you might want to check out my last Velodrome video after you've watched this one. The link should be somewhere on your screen. Less than 2 weeks ago, Optimism became available on Robinhood. That might seem like a small detail, but it's actually a massive unlock. Robinhood has millions of users who have retail access to cryptocurrencies. Now those users can trade Optimism token directly in the app and on Robinhood Legend. This represents mainstream accessibility at a scale most Layer 2 tokens don't have. When retail traders in the United States can buy a token in an app they already have installed, you've crossed a threshold. That's not speculation. That's infrastructure expansion. Here's a development that's flying under the radar for most people. Bitcoin DeFi is growing across the Superchain. BOB, one of the latest launches, is bringing native Bitcoin functionality directly to Layer 2 networks. They've created a one-click solution using wrapped Bitcoin and BitGo partnerships that lets users bridge Bitcoin to 11 different chains, including Optimism. That means Bitcoin holders now have a secure way to access DeFi applications on Optimism without going through multiple complicated steps. For anyone watching Bitcoin hit new all-time highs, this is significant. Bitcoin DeFi is becoming a narrative, and Optimism is positioned as one of the key platforms for that movement. Now let's zoom into the technical picture because this is what matters for your entry point and risk management. I'm looking at the weekly chart for Optimism going back about 2 years. Here's what I see. We have a major descending trend line that was established all the way back in March 2024 when Optimism hit the all-time high of $4.80. That trend line rejected price again in December 2024. This is a long-term resistance above us that we haven't broken yet. More recently, another trend line formed in December 2024 and has been rejecting price in September and October. Price is currently consolidating right below this more recent trend line. If we break this one to the upside, we still have that bigger trend line to overcome later. So we're not out of the woods yet technically. Looking at the Fibonacci retracement levels that I anchored from the March 2024 high at $4.80 down to the recent lows at 45 cents, we have several key levels mapped out. The VRVP volume profile on the left shows a point of control at 72 cents. That pink-blue bar could be a magnet pulling the price up. I'm using EMA lines on this chart, the exponential moving averages at 10, 21, 55, and 100 periods. Price is below all of them. That's not bullish at all. When price sits below the moving averages, it means the short-term trend is bearish. We need to reclaim these levels before we can really talk about a strong recovery. The Heikin-Ashi RSI indicator at the bottom is showing us something interesting though. We're dipping into the oversold zone with the fourth consecutive red candle. That's the kind of extreme reading that often precedes bounces. I'm not saying it's guaranteed, but oversold doesn't mean price can't go lower. It just means that as extreme readings stack up, the probability of a reversal increases. Let me be clear about what I'm doing personally, because this is the honest part where I separate myself from most content creators. I've marked a green box on the chart between 43 and 60 cents. This is my accumulation zone for dollar cost averaging. Price right now around 45 is sitting right in this zone. This is exactly where I want to be adding. I started buying the dip at 65 cents thinking we'd bounce immediately. We didn't. Instead, we went lower, and now I'm adding more. Every purchase at lower prices reduces my average cost. That's the entire point of dollar cost averaging in a downtrend. You don't try to time the bottom. You build a position gradually on the way down. I've already done 3 detailed videos about Optimism explaining the project, the architecture, and the development roadmap. If you haven't watched those, I recommend checking them out. They give you the full context for why I'm interested in the Superchain long term. For risk management, I've drawn a red dashed line at 40 cents. That's my weekly close invalidation. If we get a weekly candle close below 40 cents, that would signal that my short-term thesis is broken. That said, I'm not trading short-term. I'm building a long-term bag that I plan to hold for years. I'm betting on the Superchain narrative, the adoption curve, and Bitcoin DeFi integration. If we do break below that red line down to 30 cents, I'm reaccumulating at those levels for my long-term position. Nothing falls forever. We will have bounces, and we will have rallies eventually. The time to accumulate is when everyone's scared, not when everyone's excited. I've marked 5 take-profit circles on the chart at $1.20, $2, $3, and $5, with a moonbag target at $7. This isn't wishful thinking. These are levels I've calculated based on Fibonacci extensions and the previous rally structure. Here's my trim strategy. When I hit that first target at $1.20, I'm trimming 30% of my position. That locks in profit and removes some risk. Then I trail my stop loss. Once I hit target 1, my stop loss moves back to my entry point. Once I hit target 2, my stop loss moves to target 1. This way, after the first profit target, I'm running a risk-free trade. I'm only using house money to try for bigger targets. This is textbook risk management. You scale out. You trail your stops. You protect your capital first, and you let your winners run. Look, I'm not going to pretend this is a sure thing. Optimism is down significantly from its peak. Many people watching this are already sitting on losses. That's the reality of where we are. But what I'm also seeing is a team that's still building, developers who are still contributing, and an ecosystem that's still growing in terms of activity and innovation. The fundamentals of the Superchain, the privacy developments, the Bitcoin DeFi integration, and the retail accessibility on Robinhood all paint a picture of a project that's in the middle of a long build cycle, not at the end of a failed experiment. The chart shows us we're in an oversold position. We're below our moving averages. We're in my accumulation zone. These are the conditions where patient capital with a multi-year outlook actually gets rewarded. If you found this analysis helpful, punch the like button and subscribe to the channel. More importantly, join my free Telegram group using the link in the pinned comment. That's where I share quick updates and daily insights with other traders and investors building long-term positions. I want to know what you want to see next. Drop a comment below telling me which tokens or projects you want me to break down. Remember, this is just me sharing what I'm doing, what I know, and my personal analysis. I'm not a financial advisor. You need to do your own research and make your own decisions. That said, I genuinely believe we're watching a pivotal moment for Optimism. Accumulation at these prices could be one of those decisions you look back on months from now and appreciate. Check out my previous 3 videos on Optimism. There are links on the screen now. They dive deeper into the Superchain ecosystem and the technical fundamentals I reference in this analysis. Stay patient, stay humble, and I'll see you soon in the next video.